kick it off with a stock that's probably not on either of your radars given the age of your children. But the stock of the day today is Baby Bunting. Now, it's cut its profit guidance for 2026 amid the higher cost of living, expecting net profit of around $16 million to $17 million. That is after softer than expected trading in the fourth quarter really weighed on sales, including weaker demand here for prams. Take from that what you will. We know the fertility rate is going down. We had a downgrade from a fertility clinic as well, fewer people using their IVF services. So all of this weighing through into Baby Bunting, and we're seeing shares down by a whopping 11% today. All right, Henry, if you were in the market for a pram, would you be looking at Baby Bunting?
Well, if I was in the market for a pram, probably I would be. I've yet to have the pleasure of being a grandparent, so I'm a little bit out of the loop in this one. But yes, I mean, it was a bit of a profit downgrade. I can't see how anyone will be surprised given the economic headwinds that we've got at the moment. Lots of grumbling, lots of people pulling back on retail spending, etc. Weakness in prams, car safety, also a falling basket size, part of the problem there. And when interest rates go up, people defer the family decision perhaps. It's hardly a big surprise. I must admit, it's not a stock that pops up that regularly on my radar. If you're going to go in retail, I guess there's other stocks that you would go to first. It's not like we're going to get a Peter Costello baby bump, one for mum, one for dad, and one for the country. I think at the moment it's one and done, maybe rather than three. So not a stock that I would look at, not a stock that I would be that interested in. They are talking about the Store of the Future network, which is a bit of a bright spot, and clearly, if things improve, and we did see that retail, the CPI number come in today, which was better than anticipated, I have to say. Maybe that's going to help the RBA keep rates on hold, but there's a lot going on economically, and I think people are struggling a little bit, so not really that interested given the leverage to disposable income that children are.
Right, so I'm getting a void, but if you did have it, would you sell?
Probably not. I'd probably hold it.
Okay.
I think I'd probably hold it. It's the damage has been done. We're down 11%. This market is very fickle. Let's face it. WiseTech was down 18% the other day. It's down up 12% today.
Yeah.
So it is very fickle, and it's being pushed around by forces beyond my comprehension at the moment.
Absolutely. All right, Andrew, your view, because I think apart from cost of living pressures, a point that I made as well. I mean, people. And Henry also said, people having fewer babies, but a lot of people choosing to be child-free as well.
Well, there's partly that, Juliet, and hello to you and Henry. I note Henry is dressed up for his court appearance, which is it's exciting. So, relating to the question, though, rather than my poor attempt at humour, I really just think that people are pulling their heads in relating to spending, and they're making some really, really tough decisions, including, to your point, Juliet, not having kids. And that's, we're getting a bit of a read through there, obviously with Baby Bunting. Henry and I looked at this around 3 years ago, and it's pretty much halved over the since we've last looked at it. And it's not just the share price that's halved, but it's the return on equity. Their profit margin is down to just 1%. I mean, can you imagine trying to run a business where your profit margin is 1%? All you're basically doing is just treading water there. So on the basis of this current downgrade, and usually history will tell us that this isn't the final downgrade, there's probably at least one more coming. It's trading now on a PE of 9. So if we look at the broader market, I think the market's around 16, 17 times. And I'm certainly not trying to invoke anything with my next statement, but if you look at barbecues galore, these specialty retailers are under immense pressure at the moment. So at best, this is a hold, and arguably it's a sell if you have a look at that chart, and my comment before relating to another future, a potential downgrade rather. The one saving grace, Juliet, I think, is that it'll get to the point where someone will actually come and lob an offer for it, whether the private equity guys and girls, whether they want to come and have a look at it. But for the time being, it's a tenuous hold at best.
Do you know who is buying prams? All the people that love their dogs around the area that I live in. And
Really?
There you see people walking around pushing their dogs in prams, and I'm always like trying to get out of everyone's way, and then I realise it's a dog, and I'm like, oh my God, I saw a cat in a pram the other day as well.
No.
It's
Anyway,
not happening in Toowoomba.
It's not happening yet in Toowoomba. Yeah, okay. All right.
We're getting us, but we do have Guzman and Gomez, so there's
I
certainly
remember
a
you
level
have
there.
Guzman and Gomez. I'm guessing you probably don't have a Baby Bunting. Anyway, that is
We do.
You do
We
have
do.
a Baby Bunting. I learn something new about Toowoomba every day that I talk to you. I'm going to say that that's a double hold there, potentially arguably sell, as Andrew said, for him, but not a stock that Henry is interested in there. Of course, we talked a lot about the economic situation a lot of people in, people choosing to have fewer kids or not having kids at all. And Andrew also saying, look, when you've got a profit margin down to 1%, not something that they would be interested in there.